Joining us now from Odlum Brown is CEO Debra Hewson. Hi there, Debbie.
Thanks, Michelle.
Debbie, the question we have for you this week is, if you're a retail investor and you want to get into the bond market, how do you go about doing that?
I think one of the best ways for the retail investor to invest in the bond market is to use a laddered portfolio approach. It's a really simple strategy that involves taking a sum of money, dividing it into equal portions, and investing it over consecutive years. For example, say you have $100,000 and you want to invest over a period of 10 years. You take $10,000 or $100,000 divided by 10 and invest that $10,000 in consecutive maturities from year 1 to year 10. Now you have a ladder with 10 different rungs in it. At the end of the first year, your one bond is going to mature and you're going to get your $10,000 returned to you, and now you have a ladder with 9 rungs in it. So you've got to replace that 10th year rung, so you buy another $10,000 10-year maturity, and now you've reestablished your 10-year ladder. Why this is such a great strategy is because you've staggered your maturities out over 10 years, so not all of your money is coming due at any one time. This way you've mitigated your interest rate risk going forward, because you don't have to worry about where interest rates are because you're going to average them out over time. It's also a great strategy because it mitigates inflation risk for exactly the same reason. And the other thing that you can do is if you invest your maturities in different issuers, you also diversify your credit risk. So from a retail point of view, it's a really easy strategy to do. It's easy to maintain, and it's easy to understand, and it works.
You've laid it out really well. I would think, though, that some people are going to want some hand-holding, and this is where I guess an investment advisor comes into play.
Exactly. Your investment advisor can help you, first of all, to design that ladder and maintain that ladder. And for some people, you're going to want to have a ladder of all government securities because you want that security that goes with that. For some, you might be prepared to take a little bit more risk, so you might have corporate issuers in there. And that's where the credit risk diversification comes in. But that's where your investment advisor can really assist you to making the right choices. But the strategy is pretty easy for you to understand and implement.
And I guess where you want to invest your money really depends on your risk profile.
Exactly, and that's different for everybody. That, it can depend on where you are in your stage of life. If you're a bit older, you want to take on less risk because you're trying to preserve your capital. If you're younger, you might be prepared to take on a bit more risk because you want to grow your capital. But that's a general, it's very specific to every individual.
Great information, Debbie. Thank you.
Thank you.
North of 49, a guide to the rest of your life.